Hello, everyone, and welcome for this edition of the Talk Corner. And we are so glad that you are able to join us this afternoon in East Africa time to follow this conversation that has been hosted by the Value for Her initiative of AGRA. AGRA is the Alliance for Green Revolution in Africa. AGRA is one of the leading institutions, African institutions, driving food systems transformation, ensuring that there is nutritious and healthy food on the continent. Now, the Talk Corner is a special segment where we elevate the voices of women, amplify their successes, and bring their lessons forward to inspire other women. The Talk Corner is hosted by Value for Her, as I shared earlier. And Value for Her is a network of women agri-food companies that have come together from across the continent to bring prosperity to their families, to their countries, to the continent, through their work in agri-entrepreneurship. And Value for Her initiative is aimed at assisting these women to grow their businesses, to grow the economies of their countries, and to grow the economies of the continent. We welcome you all, particularly the women companies that are joining us this afternoon for this Talk Corner, to join the network, because in the numbers of companies, we are able to influence the business environment that is at the moment one of the major constraints to successes of women's businesses. This afternoon, we've lined up a very, very exciting discussion, and I am particularly privileged to have this team of moderator and panelists around this table to explore the issues around women inclusive financing for agri-food, for the agri-food companies. They will help us understand the issues that women face, women entrepreneurs, women business leaders face in accessing financing, capital, and investment for the businesses, and why it's particularly challenging for women. And we know that small businesses struggle across the continent to find the right type of capital, but it's particularly difficult for women, and they will help us dig deeper to bring these issues out. Now, today we have one unique woman, an expert, facilitating this Talk Corner, and it is an honor now for me to introduce Jennifer Byrne. Jennifer Byrne is a colleague of mine, and she's the acting managing director for the Africa Green Revolution Forum, as Africa's premier convening around the food systems engagements. And she will tell us a little bit more about it as she delves into this. But Jennifer is also an investment banker and a finance expert. So we just have the right person to steer this conversation today, but also that we have a fascinating team of women companies, and of course, one of the strongest partners on the continent on financing, represented here through the AFAWA coordinator, whom our moderator is going to introduce. Now, please allow me to hand over to this fascinating team, and I will just take back and listen to them. Thank you, and over to you, Jennifer.
Fantastic. Thank you, Sabdio, for the introduction and warm welcome. And ladies and gentlemen online, in our studio here virtually represented, welcome to this Value for Her Talk Corner about unlocking women's inclusion in agriculture finance. As you all know, right, securing agriculture finance is very challenging for male and females alike, but especially for women, it is challenging, given the fact of all that their responsibility, restricted control over assets, and constraints in terms of time and being economically productive. And despite the fact that many of our women are driving household or budding entrepreneurs across the continent, we still see a significant gap in financing. Only 37% of women have a bank account on the continent, not acceptable compared to 48%. And the sad thing about this is that some of these gaps are widening as we speak. So we have a couple of dynamic women today with us, as Sabdi already said, with whom we're going to discuss and address all of this. So let me introduce you to my panel. But before I do that, I just want to share with you as an audience, we are hoping for an interactive session where you can pose all of your questions also to our panelists. However, do not do this in the chat box where you're introducing yourself and saying where you're from. There is a specific Q&A box that you will have that you can go to where you can channel your questions, and I will pick them up in the intermediate to post them to our panelists, okay? So who is it that we have around the table today? I'm very honored to introduce to you Esther Desano. She's the coordinator of the Africa Development Bank Affirmative Finance Action for Women in Africa program called AFAWA. It's a flagship program for the AFDB, which aims to bring the 42 billion finance gap facing women entrepreneurs in Africa, to bring that to close. In the first year of their full-blown operations, and this is how you can see this lady is a go-getter, they have already managed to make sure that $5 million of lending was provided to over 2,000 entrepreneurs. Esther is a dynamic professional with over 14 years of experience in development, of which 10 have really been focused on increasing opportunities for women by working with financial institutions, be it insurance companies, banks, etc., to enhance profitability and sustainable access to their consumer needs. She has also worked for the IFC, where she developed financial services for women, including IFC's Women in Insurance program. Esther, welcome to the conversation. Joining us as well is Sipamandla Mankele, and she's a CEO and founder of local village foods, Bisa Beverages, and African Harvest Stable. Sipamandla completed a Bachelor of Social Sciences degrees, and she majors in community development and management. She has been named one of South Africa's top 200 young people to watch for in 2019 by the Mail and Guardian. So you can see we're walking among CIPs. She's inspired by our African continent with its diverse cultures, its quest for social and economic unity, and she really wants to play a role in the implementation of free and fair trade across Africa. Last but not least, we have Adana Uche. She's the founder and CEO of Addis Agro Processing Limited. Profiled as a strong-willed and resilient woman who found herself helping people to cook healthy. You know that this young lady managed to build a business from just $62 in 2016, but within 18 months already was running a turnover of 21,000. And she's producing spices, palm oil and seasoning, etc. She holds a degree from the University of the Port of Harcourt, River State, Nigeria, and an alumni of the Faith Foundation, the Entrepreneur Development Center of the Lagos Business Schools. Now, ladies and gentlemen, with this distinguished panel, I think we might be solving many of our problems or issues today, but what we definitely hope to do is share insights, knowledge, and get some of your basic questions answered. So I would like to go to my panel and really start talking about some of the challenges that the ladies around the table, but also the ones that are virtually joining us, are facing. Esther, I would love to talk about the work that you're doing with AFAWA, and for us maybe to give us a brief overview of an understanding of the scale, the size, the depth of the finance gender gap in Africa, and what some of the key drivers are for this gap, specifically when it comes, of course, to financing the agriculture and food sector.
Thank you very much, Jennifer, and good afternoon to all. So as Jennifer rightfully said, there is today a $42 billion gap that is existing for women SMEs on the continent. By the way, we, the African Development Bank, are looking to, if you will, contribute to closing that gap with a target of $5 billion unlocked for women SMEs on the continent by 2026, of which as of today, with full-blown operations starting last year, we are actually at 500 million. And so the challenges, I think, are many and they're compounded. So I will start first by talking about the perception that financiers have of women entrepreneurs, right? Women entrepreneurs are seen very often as being too small, informal, mostly focused in the micro area, which to them is not particularly the target market that they are seeking for or looking for, because the loan sizes are much too small. The second issue is the issue of their capacity to be able to respond to the criteria and expectations of financial institutions. Very often, women do not, if you will, have the collateral or the types of guarantees that financial institutions expect. And because of that, they tend to, if you will, put women aside to some degree. And then, of course, you have the skills, right? So being able to run or position, first and foremost, a business in a proper manner, with a vision of growth and scaling up that a financial institution can, sign on to, because when they give you a loan, it's not just a loan, they're embarking with you on a journey for growth. And if they're not, if you will, convinced of that growth, then it lessens their interest. To make sure that all the processes are in place that enables a company to be able to manage and mitigate risk is also critical. And when they have the impression that this is not set up and that the company is running in an informal manner, then it causes them to see it as too risky, and therefore they're not interested. And then you have, and this is where we come to the agriculture sector itself, you have risks to some degree that I guess financial institutions or the entrepreneurs themselves very often don't, if you will, control. Issues of weather, issues of climate change, and so on and so forth, which causes basically financial institutions to shy away from, lending to SMEs in general in that particular sector, unless they have very specific products and services for it, which means that they understand the ins and outs of that sector and how to ideally control and manage risk to ensure that at the end of the day, the loans get repaid. Because this is what bankers are in the business of. They're in the business of selling money. So they lend and they expect a repayment with, a certain rate of return. And if they're not able to, if you will, from the get-go, see what kind of return they will get and what is the ability of repayment, then of course for them it's too risky to embark on. So these in a nutshell, Jennifer, are I think the compounded challenges. Of course, you also have the issue of mobility, the issue of time management for women, which is also sometimes, if you will, I don't want to say an impediment, but it definitely influences their ability to access the right types of networks, access the right types of markets, and that in the end also has an impact on their ability to scale their businesses.
Okay, wow, thank you very much for that contribution, Esther. And I mean, like you've listed it all, right? The challenges with regards to the profile of the companies, being it from low capacity, little assets, also small and not necessarily appealing to financial institutions, but also the broader environment. Operating in the agriculture sector is probably one of the riskiest environments to operate on, and compounded by issues like the political economy, climate change that are impacting value chains, and I think also overall financial literacy across the continent and consumer markets are not making it easy for women to have access to finance and investments. But we will talk to one of the champions who actually managed to overcome that. So Adana, your story is actually very intriguing, right? Because as you explained to us earlier, you started with only 30,000 Naira in 2016 and managed to significantly increase your turnover. And you went from really making products in your kitchen to now having an operation of 5 staff. You're supplying to 22 supermarkets, and you have even gone international. So can you explain to us, how did you start, especially in terms of your finance model, and how did you adapt that throughout the years? What was really some of the key success factors or the key learnings that you would like to share with the other women in our audience who might be at the same position where you started, and as Esther described, are in a position that they're not as attractive for financial institutions?
Oh, okay. Thank you, Jennifer. I'm glad to be here once again. For me, like you just rightly said, I started in my kitchen with just $62, and it was a loan, right? And I've managed to grow the business, till this far. So first, I had a goal. I know what I wanted to achieve, right? I know in the business world, especially in the agricultural value chain, it's like you said, it's very risky. So nobody wants to really listen to you, right? They want to see that you can do something before they can pay attention to you. And that was actually what happened to me. But my brother was the one that even loaned me the money. So he knew what my capabilities were, and he believed in me, right? So he loaned me the money. And, when I started, there were not so many people doing what I was doing. I started out as a personal shopper, right? I just had a baby, and there were so many odds against me. But like I always tell people that cares to listen is that you have to have a written goal. I had what I wanted to do, and that was helping people eat healthy. In the Nigerian open market, there's a lot of food adulteration going on. So how can we curb that? That was one of the missions. That was what I wanted to do, and that is what keeps me up in the morning, right? So I started out as a personal shopper, and it grew because when I talk to some of my customers, they tell me, oh, they're having issues with getting foods that are organic. So I listened. Right? I listened to some of the problems that they had, and I had to go back to the drawing board and try to solve those problems. And I was consistent enough. Like I said, I started in my kitchen. I was consistent. Yeah, it's risky. Nobody wants to pay attention. And now everybody wants to know, okay, how did you do it? Because they've seen that you did it and you succeeded, even with little or no money. Mm-hmm. And one thing that also helped me was I enrolled in a Faith Foundation course where I had to learn how to run a proper business. I learned, the last speaker talked about financial literacy. I didn't know it before now. I already had 2 businesses that failed, right? But this one, I wanted this one to succeed. So I had to enroll on a Faith Foundation business course. I call it business education, where I learned how to run a sustainable business. And that was what helped me, because after the program, my business, grew. Now people can pay attention. People can understand that actually I started with nothing and now I have something. So that's it.
Fantastic, thank you. So I take a couple of things from your story, right? Number one, you have to find somebody, an investor, no matter how small or whether that person is a family member, to believe in you and your skill sets. So that is one, that's the first sales pitch. Number two, you need to document your goal. I like how you said that, not in terms of write a business plans, etc., but document your goal. And be clear about it and consistent. And I think one of the other things that you also mentioned is that you listen to the market and were responsive in terms of how you developed your product. And you also educated yourself on how finance, etc., worked. So I will be coming back to you, Adana, because I do have a follow-up question, but I'd like to go to Sipamanda first. So Sipamanda, picking up what actually Adana mentioned, in a sense that you have to educate yourself and build financial literacy. Now, there are quite a number of programs that are being set up sometimes also by financial institutions, Value for Her, etc., to build the capacity of women entrepreneurs. Can you maybe share with us from your story what some of the key learnings were? What was really the best value that you got in terms of educating yourself on how this worked? So that's number one. And number two, how did you apply that in practice?
Yeah, so good afternoon, Jennifer, and good afternoon to my panelists and everyone who is here today. I think for us, there's probably two things. I think for me, when I studied at school, I did a bit of accounting and I picked up a few modules. But I did sort of, after when I started the business, join in various entrepreneurship programs. And part of it was also be part of the Value for Her program. And I think some of the courses can be very specific and quite helpful. So for instance, if you're doing a course where you talk about your balance sheet or your accounting systems and what do you need to put in place to be able to record your finances. And I think that's quite applicable and very practical things that you can implement in your business. But I think another thing, perhaps that could have been a negative in a sense of some of the programs assume that a lot of entrepreneurs don't have the literacy. They make assumptions that we need to just put in a program, and then once the ladies attend a program, and all of a sudden they're going to run successful businesses, and it's not very specific. And so those are some of the sort of negatives that I picked up in the programs. But I think the programs that I did go through that were very specific for me and my needs, generally key things that you want to focus entrepreneurs on is how do you raise money, or how do you manage your money? How do you run sustainably? When do you break even? Do you even know what break even means? So I think to be able to go through those concepts, and I could apply them, not just university education or senior secondary education, but it was very, very specific to me. So I found that there's value in that, or when there's programs like those.
Okay, fantastic. Thank you for that. So I would like to go back to Adana before we go to the questions. And I'm encouraging everybody on the chat, if you have questions for this fantastic panel, do post them in the Q&A box and we will pick them up and share them with the panel. So Adana, can you take us back to the moment where you basically applied for your first loan? And what the biggest hurdle was that you had to overcome and how you approached that?
Okay, I was scared, right? I was scared. Because of the stories that I hear, the banks, lenders, interest rate, I was really scared. I didn't want to do it, but I did it anyway, right? And it was a loan from the Central Bank of Nigeria, right? So I applied and I forgot about it. I forgot about it. It took them 2-3 years for it to be approved. I got a call one that my loan has been approved. I went for interview. And I wasn't, truth be told, I wasn't really prepared because I didn't know what to expect. But because I knew my business and what I wanted to do, right? I could remember they asked me one thing. They asked me, what are the risks involved in your business? Right? And I started out with palm oil and crayfish. And I'm in the eastern part of Nigeria, where I get my products from the eastern and from the northern part of Nigeria. So it takes about a whole day, 24 hours, a whole day or two to drive down to bring the product. So because I knew my business, when they asked that, I could answer, tell them the risks might be, can have an accident and I lose all the product. There could be theft, bad road and all that. I could remember, I could picture that vividly. And the man was like, okay. And after then I got the loan. And when I got the loan, that was another hurdle. I didn't want to take it. It was a 5% interest rate. I didn't want to take it because I was telling myself, you are doing this thing in your kitchen. Can you even repay? Can you do it? I left, honestly, I didn't, they were calling me. I was getting a series of calls from Abuja, saying, Madam, we've approved this loan. Why don't you want to take it? I didn't want, honestly, I was scared. I told them that the terms that they gave me wasn't good. But I had to now talk to my account officer. That is where also financial literacy, comes in. You have to have, even if you don't have the knowledge, you have to have people, that can advise you. So I had to call my accountant. I said they wanted to give me a loan also, but when I looked at, they told me their interest rate was about 23%. I said, but I have a loan that they are giving me 5%. So why are you giving me 23%? I can't even pay. They said, Madam, you have a loan of 5% interest rate in this Nigeria, and you don't want to take it. You better take it, right? So I had to go back. I had to do an analogy of what if I get this money, what am I going to use it and do? I had to do a plan, right, of how I'm going to get back the money to repay. How many products am I supposed to sell in a month to be able to pay back the loan, pay the staff, because I just hired some staff, and be able to have something. So I went back, did a strategy, of what I wanted to do. Then when I came back, I signed the agreement and I took the loan. And to tell you the truth, since I took that loan, my business saw another change, right? Because immediately I just got the loan, I was able to procure some of the equipment. I was able to move out from my kitchen. I moved into my mini factory. And funny enough, and it was just in the wake of the coronavirus. And I also applied for some grants, and I got these grants plus the loan from Global Alliance for Improved Nutrition. I got a grant from them. I also got a grant from the US Consulate in Nigeria. So everything just came along. So I would say maybe I took that first step to take that loan, and everything just went well. Yeah.
Well done. Thank you for sharing that. And it's quite interesting to see that with that loan that you managed to unlock, which really helped to drive your working capital so you could invest further in your business and accelerate certain things, get machinery, etc., how critical that was. But I do take a couple of things away from your story that are quite interesting. And I like to go back to Esther to then see these are the type of women we're trying to elevate, like Adani and Sipamandla. And it's very good to hear their raw stories, literally how terrified she was of basically almost signing her business and her life away to a loan, not fully understanding even the benefits of the interest rate, that she was still brave enough to try to negotiate the terms, but did realize that she had to plan very carefully because paying back that money was critical in order to get more money, so to say. So Esther, can you maybe share with us how you translate it into the program that you have built and what type of products this program is actually putting forward to women like Adana and Sipamandla on the continent?
Thanks, Jennifer. I mean, I couldn't agree with you more that hearing both Adana's and Sipamandla's story literally speak to why we have structured the AFAWA initiative and the way it is being rolled out today. So when we work with financial institutions, so these are, commercial banks, mezzofinance, and to some degree, microfinance institutions that are committing themselves, engaging themselves to supporting women entrepreneurs. However, very often they don't really understand the market, the ins and outs of, women entrepreneurs, and have a tendency to bunch them all in the same bag. And this speaks to Sipamandla's comment about the fact that they automatically think that all women entrepreneurs know nothing about financing. Whereas the women's market is not a homogeneous market. It has different types of women entrepreneurs, some that are much smaller and that need, more basic hand-holding, and those who have been in business for a little while longer, have studied, have accessed the basic, if you will, information, and are now ready to take it to the next level. So what that means is that the financial institutions have to customize their programs based on, one, where they see the opportunity for them. So in the event of agri-finance, again, it's about understanding who we're talking about, who's the segment that we're talking about. If we're talking about farmers, the training is going to be different. The product is going to be different. If we're talking about women who are in the agro-processing, here again, the training is going to be different. The process, the product itself also is going to be different. Sometimes you talk about short-term financing, sometimes you talk about longer-term financing, and so on and so forth. So for us, there is no one size fits all. The financial institutions that we work with basically get to customize their offering, which are both financial and non-financial services, to the type of segment that they're speaking to or that they're trying to, to reach out to. And so in some instances, you have financial institutions who are working hand in hand with cooperatives, right? And giving them a much smaller loan, and depending on the harvest cycle and so on and so forth, are able to basically time the repayment according to that. The kind of training, financial literacy training that they're going to give is also going to be very basic, but in a way in which the women entrepreneurs can understand it. Right? You also have others like the likes of Credit Bank in Kenya, or Access Bank in Rwanda, and others who are going to work with women entrepreneurs who are more in the processing of the product, right? So here it's about acquiring equipment, it's about knowing where to place your products in order for them to be sold, so access to markets, in addition to walking you through the different processes of accessing the kind of credit that you need, right? So again, all that to say, it's very important that first we understand that all women entrepreneurs are not the same. And because they're not all the same, just like financial institutions are also not all the same, and this is a message that I also send to the women entrepreneurs out there, you need to know who you need to approach when it's time for, financing. And ideally, you do that way before you need the funding, because it's in the way before that the relationship with your financial institution is actually built. And I like very much Adana's example, where she said they called her, but she was afraid because she didn't know whether she would be able to repay or not. Now, had she had the relationship, and this was the central bank, so different, but had she had the relationship with a financial institution way before that, right? And had she participated, if you will, in the women's program that they would have, then they would have helped her build basically her case all the way up, prepare her. You have the capacity to take on X amount of loan, but this is how you will have to set yourself up in order for you to repay it. So today, what we're actually doing is enabling financial institutions to become part of your growth as women entrepreneurs, and to handhold you to the process. They know it better than anybody else.
Well, fantastic. Thank you for that, Esther. And I really like the analogy in a sense of that you spoke about in terms of the relationship being built. It's almost like when you're also going to a health institution, a hospital, when you have a doctor. It's about being educated about your own body, so you know that there's something wrong or what your needs are. It's feeling comfortable asking certain questions and really being guided towards solution. And that's not just about filling in paper, but really building that relationship, having insight, and having a tailored approach towards your needs. So I definitely hear that, and also thank you for bringing that up, Sipamanda. Sipamanda, I am coming back to you because I also want you to share with us a really real life experience that can resonate with many of our women entrepreneurs. But I can see that the chat box is coming to life after Adana and Esther have started exploring, but how is then that first step, your maiden journey into the financial world? And we have a couple of questions. Just allow me to quickly go to the chat box and ask a couple of questions to Adana. So Adana, there are questions about what type of loan you had with, I think, CBN, but also, of course, were you able to pay back the loan completely? And therefore, were there any challenges or bumps along the way, and how did you resolve that?
Okay. It was an agribusiness loan for SMEs. It was called agribusiness. I will type it in a chat box for those in Nigeria that want to access it. I'm still paying it back because they gave me a 4 years to repayment. So it was very, very good for me. And they gave me 4 months moratorium. So it gave me time to, after buying the equipment, the raw materials, to be able to start selling, right? Because those are the things that, you know, one thing I've learned in terms of loan. So when you get a loan, they have to give you a time so that you must have, you know, recoup some of the money to pay back. So I'm still paying back. And I'll just put it out there also. So Lagos State, where my business is where my business resides, they also have a COVID loan or COVID grants that they were given. So when it came up, one of the options were if you had any loan that you're currently repaying, so they have opportunity to pay back 40% of that loan. So, and I got in also. So it's helping me to cushion my payback, right? So the Lagos State government is helping me pay back. And one thing I would tell people, and I was telling some people in my group yesterday, is to take opportunities, right? I remember how I got to know about Value for Her, right? It was one of the programs that I attended, sponsored by GAIN, and I met someone. That is where partnership and networking comes in. And she told me, oh, I mean, I'm a member of Value for Her, and they always give people opportunities. They train people according to your needs. So you need to join, right? And that was how I joined. And to tell you the truth, you know, I've gone through trainings, and it was through Value for Her that I was part of a RISE training, where I was selected among the 3 women that pitched for investment in Africa. Mm-hmm. So that's about that, yeah.
Thank you for that, Adani. So it would be very helpful if you can share some of this information in the chat box. Esther, similarly, there are a number of questions coming in terms of how to access the AFDB program. So you have some contact details that you can share with us. That would be very helpful. I would like to go to Sipamanda, because Sipamanda, you really shared in a very interesting way how the need to have tailor-made support for women SMEs. And you also have a very impressive track record. Today you have a company that has, although the turnover is still below $1 million, you've managed to raise $500,000 in terms of funding. Now, one of the things that to me is quite interesting, Sipamanda, is that there seems to be, although we're saying it's not enough and there's a big gap in terms of the financing and funding that women entrepreneurs need to receive, their grants, their loans from different banks, the AFDB has a program, USAID had a program, etc. How did you navigate it, that whole landscape in terms of what was on offer? Who did you consult? Take us to those moments, the decisions that you made, and especially what you learned from that process.
Yeah, so probably what I didn't say. So when I started the business, I was obviously working from home, garage, staff room, kitchen to a warehouse. In that process, obviously you can't get access to the bank because there's no huge market at the time. So you would have to use the typical friends, family, and fools pool and you'll be able to raise cap. And they're really willing because they see your passion and they see your excitement, and they'll give you the money, whether it's grant or loans. And then the next phase is you want to go to sort of seed capital around grants. So I did quite a lot in South Africa. There was a lot of companies, corporates, but also the government that had pitch competitions. So I did quite a few of those. I think I probably won about 3 pitches. And that was, some pitches were not just monetary, but it was purchasing machinery for you as a business. So I think what wanted to understand is where they were at the point in terms of, and who was offering what support. For example, I've just mentioned that one government institution ran pitches and we were competing for machinery with about 100,000 Rand. And so that machinery assisted us to be able to, implement and then grow from there. Then there were other fundings where it wasn't really money as well. It was either they assist you with your IP registration, and so you could leverage on that. That was also quite helpful. But another avenue, which is other corporates, so not just government or banks, but other businesses where either through their CSI program, that you might find that there's an element that supports smaller businesses or businesses working in a certain particular sector, specifically maybe around agriculture, or if a business is operating in a particular state and they want to do a lot of community impact work and they're looking for SMMEs, that's another way of sort of leveraging of capital. We also use some of those. We will also be able, we raised, still have a loan, an interest-free loan that is payable in 5 years through another big corporate, and also equity into the business. Because that's something as well, when you're raising capital, there needs to be that willingness to be able to share your equity with other people. And that often helps because it not only just brings capital into the business, but assists you with skill set and putting together a board that will able to add value, and people will able to unlock some of the networks for your business. So I think those are some of the key things for us when we were considering in terms of what strategic partner are we looking for, but at the same time, what is on offer that's actually not cash, but it's actually something that if we raise cash, we were still going to be paying for it anyway. So is it machinery? Is it legal? Is it marketing? Do you need marketing material? Who offers that? And that does add up, because instead of you paying cash directly from your pocket or money that you've been able to raise, you can then apply it directly from that. I mean, even some of things from advertisers, where advertisers have been able to do some pro bono work, and some law firms have been able to do pro bono work when we're applying for, especially around IP and doing our advertising strategies. One didn't pay for that. So that often helps. I think sometimes as SMMEs, we sort of look at who's offering the money instead of looking at what are supports that are available in the market and how can I leverage that support without really getting cash or without giving out equity or being able to take a loan that is interest-free. We also have a really good relationship with our bank. We bank with Standard Bank. And I mean, when we started off, moved on to the warehouse, Standard Bank at the time had a grant facility. We applied and pitched, and they were able to come view what we were doing, and we got a full grant funding from them. And now one is able to go to Standard Bank and say, listen, we've been able to grow from the grant that you've given us. Now we need a loan to be able to expand, or here's a purchase order from this big retailer. And you then support us with funding. It's easier to have those conversations when you're already being able to show a track record with the bit that you've actually had. The other key thing I think is quite important, and one of the reasons why I think equity is an important tool to use as a small business is sometimes you don't yet have a purchase order from a big retailer. Sometimes you need money for R&D. So those are costs that you might not get them back. So you're quite wanting to people who have really patient capital, where you're just burning cash, and that's just the reality of SMMEs. And one of the things in Africa, we sometimes don't have that. If a person like SMME is in, whether it's in Silicon Valley and so forth, where they've really got huge runway, where for 12 months or 18 months, you can afford to not make any profits, but you're putting in money into the business and putting in R&D and developing the brand, and therefore you are able to then be profitable. So sometimes our funding here is quite pressurized, because they'll say, no, you need to start making money in 6 months, or they want to actually fund you when you're profitable. And often that's not the case. So I think from a funding point of view, we need to look at how do we have facilities that are actually a bit patient with us and allow us to have that runway, because most of the times you actually are betting on the joker than the horse itself. So you want to be able to fund the entrepreneur. And so, yeah, that's all.
Fantastic. I really think these are such rich insights, and I think we're all privileged. We are now at 131 participants, and we're all privileged to be listening to you two ladies and sharing your experience and your insights in terms of how you build your businesses. So there are really a couple of key learnings that we can take from what you shared with us, Amanda. So I really like the term, you start with your friends, families, and fools. And I can see the comparison with Adana as well, who started with a loan of her brother, small, but it helped her to actually turn her into a businesswoman. And ladies also online, start with the friends, families, and fools, the people that you convince because they've known you for a longer time, they believe in you and are willing to start with that seed investment. My second takeaway from you, which I think is fantastic, is your approach towards seed capital. That in the beginning, you pitch, and the different programs and opportunities, you seek them out, and you pitch your business everywhere. But most importantly, it's not just about money. It's about where can you find the partnerships, the networks, the technical assistance, etc. So that for me is really, really a great learning also that I think is probably quite useful for the ladies online, and especially the other sources, like, looking at, for example, other businesses. And once again, the good relationship that Esther was talking about with regards to financial institutions. But I'd like to dig a bit deeper, Sipamanda, because Adana shared with us her first approach in terms of gathering a loan. How was it for you basically to share equity and get an equity investor in? Can you take us to that moment?
So if I'm hearing your question correct, Jennifer, you're asking how was my experience when we got an equity investor?
Yes.
Is that correct? Okay. So obviously, most of the time there's an obsession with, oh, I own 100% of the company. And that's awesome. I think it's really great to own 100% of a company. But what's the point of owning 100% of nothing? Then you go to a person who actually says, hold on, I've got a bit of capital, but not only do I have capital, I can assist your business with some of my networks, or I can share some of your load. Often they'll say they'll share the load, but they don't really share the load with you. All the decisions still are stuck with you. But I think it is nerve-wracking when you actually have to give up equity because you're giving out control. And in the moment you start giving out and you need more to raise more capital, you might have to give up until maybe you're no longer the majority shareholder. Luckily with our investor, I still own 100%. It's been probably 3 years. They haven't converted as yet. I think with COVID and the delays and a bit of DDs and so forth. But I think for them, they're looking at, okay, maybe we should look at it as a grant. And if we get another investor, maybe they'll buy us out, but no pressure on your end. But it is something that I think for us, we are open. I think right now as well, we're out in the market, raising capital and pitching for still in the seed capital space. And I think we not only look at it as giving out something, I think we should look at it as what am I gaining by giving out? And it's important not just to look at money because, money gets finished. You will ask any SMMEs, like when it comes, it looks like it's a lot. And you start paying the salaries, you start doing R&D and you're thinking, how did we get here? We no longer have capital anymore. Months have gone and months have gone. So I think it's quite important that you look at what type of partner you are finding. So similar to a context of a marriage, people don't just marry because a person is your opposite sex or whatever it is that you're attracted to. You have to find somebody with a similar value system so that it's at least bearable, whatever difficulty this institution might bring. So partnership or investors, these are people that are not from the same mother and father. People, we grew up differently. Everybody has a mandate. Some funds have huge mandate in terms of turnover that you need to make, and some people just want you to make an impact, and that's how they're going to judge your profitability or your success, is how much impact have you made. So I think it's really, really critical for any businesses to look at it in a way of what am I gaining and who am I partnering with? Do we align in terms of value system and the strategy that we have in the organization? How will that person assist me to be able to achieve our vision as an organization? If you find somebody with money and they don't share your interest in terms of the value system, and they just say, okay, here's money, turn whatever you're doing around, and you feeling a bit nervous about that, then I don't think you should take that money, turn back from it. I think Adana, you were saying, you were a bit nervous about taking some cash up front. There's nothing wrong with saying no to money, nothing wrong at all. But I think you want to say yes to the right fund. Yeah.
Thank you so much for that, Sipamanda. So there's nothing wrong with saying no to money. Say yes to the right partner, the right funds, and the right resources. I think those are also very, very good insights as well. And I can see there are also a couple of other questions coming through the chat. Esther, I hope that you're seeing them. Many are really related to how do we access grants and loans? How does it all work? Why can't we directly get funding from the AFDB? I would like to go back to you and actually post there for a couple of questions that are also coming through the chat, Esther.
Mm-hmm.
Number one, we've heard from the ladies, and I think it's also really coming through in the questions, the chats and the comments. There is, of course, a significant appetite. And you've already mentioned that some of these things need to be tailored. It's already fantastic that the FDB has a FAWA, but how are we going to scale this for the rest of the continent and make it sustainable? This is already a great initiative, but you can see there's a lot of support required also within financial institutions to better tailor and services to women. There's a lot more information that needs to be out there also for the ladies here. Where do you start? So to you as an AFDB, number one, how are you going to scale that? But number two, also, what is your message to the ladies here online in terms of where to start?
So thanks, Jennifer. I think before I even go to scale, it's very important, as I said earlier, to understand who you have before you, right? The financial landscape is huge. So you have development institutions like the AFDB, who are known to be wholesale financial institutions, which means that we do not have the capacity to go towards, if you will, a certain size of the market, right? I think we were discussing it very, very recently with another panel. And technically, for us, the amount of a loan would have to be significantly large in order for us to lend directly. This is why, and that leads me to the question of scaling up, we work via financial institutions. So the starting point for any woman entrepreneur is the financial institution that she has signed on or signed up with. If you're not working with your bank, please go open an account, and ideally a commercial account, in order for the financial institution that is, by the way, signing on to these programs, right? We're not forcing banks to like take on the money, right? They have a choice also to say no. But when they come in and they take our money, it's because they're engaging themselves. So Sipamonla talked about standard, right? And so these are the likes of financial institutions that we're working with in order for them to support women entrepreneurs. So it's not so important that you know that it's the African Development Bank or anything of that sort. It's more important that you see that there is a financial institution that is actually looking to work alongside you, to grow a relationship with you in order to get you to grow. So there is a bit of action, I think, from the women entrepreneurs themselves to go towards the bank. And very often I say, women, we're afraid, as we've heard, right? When we hear about going to the bank, taking a loan, they're going to ask me for all kinds of papers and documents and guarantees. And then they're going to start talking about interest rate, throwing out names and words that I don't even understand. So you shy away. And so this shyness, if you will, blocks you from being able to access what is out there for you. So you've heard it. The money is actually out there. It's just a question of knowing how to position yourself and where to enter. And honestly, it starts with the financial institution first. So that's one. The second is, for us, the FAWA is a starting point, right? Our first goal, as I said, is $5 billion of unlocked financing in the next, I guess, 4 to 5 years at this point. 2026 is if you will, a very important year for us because this is where we see whether we've hit our target or not. We're expected to be in 54 countries and are literally, if you will, through our different mechanisms, working hand in hand with financial institutions who, by the way, are when they're interested for a number of different reasons. They're not interested solely because, okay, women are an important segment of the market and so on and so forth. For them, it's not a social type of an approach. And it's important that you, as women entrepreneurs, you also position yourselves as a commercial entity, as a profitable entity. It's not because, you know, it's social, you have to help women, that because that's not how they're seeing it. Just like you're in the business of making money, they're in the business of making money. And it's so really important that you position yourselves as such so that they see the opportunity. So that's the first reason, by the way, why they sign on. And it's actually the way in which we pitch it onto them. Women are a profitable market. Women have the capacity to be organized. And you see it with Sipa Mandla and Adana as well, right? So if you position yourself properly, you have done your homework, you have done the research, there is no reason why they will not support you in the process, right? So I think it's very important. And technically, this is how we scale up, right? We push the money into the financial institutions, we handhold them, they put on programs. If women entrepreneurs also come to the table, there is no reason why this doesn't take up. And we're seeing it actually when financial institutions are serious about it. And when women entrepreneurs come to the table, the results are amazing, right? Women grow their businesses, they employ more people, they have the ability to scale up. Some of them come back and are all of a sudden too big for financial institutions. And it's now time to put them in front of another type, right, of a financial mechanism in order for them to grow.
Fantastic. Thank you for all those insights. Oh my God, I could talk about this for hours and have all of you ladies share a lot of insights with us. One thing that I would like to ask the organizers is that please, if you maybe can send a follow-up email to everybody who participated with some of the key links in terms of how they can access the AFAWA program, that actually would be fantastic. And we only have 4 minutes left. So I really, really want to give everybody 1 minute just to address the audience and the women around the table in terms of what does the future hold and what is the last and key recommendation that you're giving to all of our fantastic agripreneurs around. I keep saying around the call because as far as I'm concerned, we're all in the same room. So let's start with you, Adana. Please go ahead, and then we'll go to Sipamanda and Esther in closing.
Okay, thank you very much. I've enjoyed the talk. Okay, from Sipamanda and Esther, there's something that I took away, and that is the relationship with your bank is very, very important, right? Financial inclusion, we are flogging it, but what does it mean in real time? It's just knowing what to do, how to do, and when to do it regarding your finances. So you want finance, you want investment. Are you ready for that? If it comes, are you ready? Do you know the type of investment that fits you? There are some investments that you're going to get, it's going to kill you, it's going to drown you, right? So from my own experience, I started with family and friends, right? They really supported me because they saw the drive and they knew how hardworking I am, right? So nobody is going to invest in you if they don't see the drive, if they don't see how serious you are, and if you don't tell them how you're going to utilize that money, right? I have positioned, I remember I went to talk to a few people, friends, to invest in my business at the early stage. But at the time I said, no, I'm not even right. If these people give me 2 million now, do I even know what I'm going to use it for, right? But now I've really built what I have. I didn't pay myself for almost 3 years, honestly. I just started paying myself last year because I knew what I wanted to. Yeah, I knew what I wanted to get. So I wish everybody, and that's going to. So thank you for having me. I appreciate it.
Thank you, Adana. Very inspiring. Sipamanda, 1 minute.
Thank
please.
you. Yeah, thank you so much to you, Jennifer, for leading us so well in this panel, and to thank you for everyone who's just posed the questions. I think one of the most important things I don't know, I might sit on the panel as entrepreneurs, but a lot of you guys are online and have tuned in and are running businesses. And I think it's important for us not to lose our focus. Let's work hard. I think not just to look at where you're based, whether I'm based in South Africa or you're based in Nigeria. This is our continent. Africa is our home, and we've got to make it work. And I think as entrepreneurs, the contribution that we can make by employing other people, at the same time, making sure that we leverage on the natural resources that God has given us, the land that we have. Let's harvest what we have. Let's produce products, value add, and take products to the global market. Let's stop being just consumers as Africans. And we need to work together. This tribalist thing that we have, not just here in South Africa, but all over, if we could focus and be united, those are key things, I think, for me, but also at the same time, work as hard and make a difference in our economies, in our communities. I think we're going to go far as a people.
Wow, inspiring. Africa Unite. Esther, what questions from you?
I mean, both Adana and Sipamonla have said it all, but for us, it's really to multiply the Sipamonlas and the Adanas on the continent. That's what we're here for. We believe in the strength of women entrepreneurs and in their capacity to really lead the economic growth of our continent. It cannot happen without you. The financing is there. I think it's time that you position yourself and literally, as Sipamonla said, it's work and we know it. It's work, it's not easy, but as you're plowing through, there's no reason why as women entrepreneurs, you can't do it. Partner first with your financial institution, partner with other women entrepreneurs and scale up. If you come together, you have the ability to put businesses that are much larger that will get the attention of the financiers, right? Don't be afraid to go and get the information.
Absolutely. Thank you, Esther. So ladies, this has been such an inspiring engagement. From all of the insights, really, my two messages for you as you're going out is the following. Walk into your bank tomorrow and challenge them why they're not working with Esther at the Africa Development Bank, AFAWA program, and unlocking more money for women entrepreneurs. That is a service that they owe to the communities that they're making their money in. So be bold. Walk into your bank and ask that question. Number two, unpack your fears. Because if you unpack your fears and you get the right questions, you will say yes to the right money. Learn from Adana and Sipamonla, who have both done that. And they didn't shy away or run away. They unpacked their fears and they said yes to the right money and resources. Ladies and gentlemen, that was a Talk Corner on unlocking finance for women in agriculture. We had a fantastic panel. I would like us to put our hands together, go forth, multiply, make Africa proud. Thank you.